What is going on, investors? Back again. Time to take a look at a Zillow Group, ticker symbol Z. This stock has been on an absolute tear. Take a look, up 11% on Friday. This stock has been absolutely soaring after posting earnings. So what we're going to do is we're going to jump into the numbers, see what investors really are excited about Zillow, because take a look at the stock chart. This stock has been on an elevator ride and it is still going, man. This thing has been shooting up. It's been gapping up. This stock is at near all-time highs. And so investors are loving what they're seeing. So we're going to jump into the earnings report. Now, before I really get into things, I'm gonna post a link in the video below. I've got a series of real estate market videos that I've posted here on my channel. I've created a little playlist. If you're interested in the real estate market, I encourage you to check those videos out. I actually think the real estate market is going to be one of the best investments over the next, we'll call it 12 to 24 months after the market corrects itself. And I believe I'm a little bit early to predict that the market will correct, but all the data and all the signs are there that the market will correct. So if you're interested in real estate investing, check that playlist down below. Now let's jump into the stock here. Zillow, valued at $17 billion. And again, we're at basically an all-time high, not all intraday high, but this stock has been absolutely soaring. Now let's jump into the financials. The company leads off with their balance sheet. And so it's almost like a dating profile. You're always going to put your best picture forward with the best filter, the best angle, making you look the best. And that's what these companies do. And by all means, the other parts of the financials actually look pretty darn good for Zillow, but the balance sheet is absolutely phenomenal. So we've got, we'll call that close to $2.6 billion worth of cash. That compares favorably to the beginning of the year where we had closer to 2.3, 2.4. So cash has ticked up a little bit. If we come down here to total assets, we've got about 6.5. A lot of it, some of it is tied up in this goodwill, which I tend to discount just a little bit. But considering they have so much in cash, they've actually ticked down their inventory of homes. Their mortgages have ticked up. That's actually a high margin business. We'll talk about that in a minute. But this is a super clean asset side of the balance sheet. They've got well over $6 billion worth of assets. Even if you discount this goodwill, it's still super impressive. Now, from the liability side, can it get even better? Yeah, it actually does. Take a look. Current liabilities, we only got 387 and it was 920 at the beginning of the year. So we're doing a great job managing that. Total liabilities are $2.5 billion. I mean, that's nothing considering you have basically all that and more in cash. This company has literally all last bit of cash could cover all their liabilities, not just current and long-term, all their liabilities. So that is as crystal clean as you can possibly find in a company. I see nothing wrong with that balance sheet. Let's move down to the operations statement. So this is super interesting. So take a look. For the most recent quarter, we went from 599. Okay, so we got 3 months ended here, 1920 here, 6 months ended here, 1920. Take a look at the most recent quarter. We went from 600 million up to 768. So that's a big jump. In fact, if you go to Zillow's press release, here's Zillow's press release that they posted when they reported these. Notice like right in the first sentence, what do they say? Quarterly revenue grew over 28%. And so a lot of investors are going to come to this and say, man, revenues grew 28%. That's awesome. And that's all they're going to do. This is the investor channel, not I can read the first sentence of a press release. So let's jump in here and actually dissect this a little bit, because it's actually not as great as it seems. Although I'm not criticizing Zillow, every single company does this. This is why I tend to ignore the press releases and just jump right into the earnings. But there's some interesting stuff going on here. Take a look at what this, so homes is basically like Zillow flipping homes. Okay. You can go to Zillow, you can press a button and they can kind of give you an estimate on their home. I mean, I don't know if it's that easy, but they're basically buying homes from people on their app. And so I actually think that's a cool business. I actually think Zillow's doing a great job vertically integrating this company. More on that in a minute, but let's take a look at this. In the previous period, they spent about 248 million, 249 on homes. This period, boom, this is their revenue. Actually, it's not what they spent. This is the revenue that they brought in. They brought in $454 million. That's a huge jump. I mean, that's almost a double there. So that's where the vast majority of the gains in the revenue are coming from. Now, what I want to point out to you is take a look at the margin in this business. So we've got cost of revenue down here. Here's homes. In the previous period, we spent $240 to make $248. So that's a super low margin business. Not saying that making little less than $8 million is insignificant, but it is a very, very low margin business. And those margins continued. We spent $431 to make $454. Again, that's over $20 million. But take a look at I would guess you could call it their legacy business, which is their app and their website. You've got the IMT here. Look at these margins. 23 to make 280. Oh my gosh, I'm drooling right now. 26 to make 323. So here's what I want to point out is these actually drop. Look, we went from 323 million down to 280. So yes, in the first sentence of the press release, revenues grew 28%. That's an absolute stone cold fact. But unfortunately, the vast majority of those revenues went to a very, very, very low margin business. Now, if it keeps doubling like this margin can stay low and it should flow to the bottom line. That's not a big deal. But what would you like to see is for the high margin business to resume growth. And obviously with everything going on in the world, we can assume that home buying and those kind of things will start to normalize a little bit. Inventory's been under pressure. I probably don't need to explain all these things to you. Now, mortgages is actually a really nice high margin business too. They spent 5.8 to make 33. Back here, those margins are similar. So those are two really nice business models right there. And those are the ones I would really pay attention to. Obviously, if this home buying business can keep growing like this and they can keep making consistent margin, not high margin, but consistent margin, that's growth that you would like to see. Now, what's interesting is Zillow doesn't give you like a gross margin. So really what they should do is take this 768 and minus this 461 and then have a line right in here above sales and marketing where they tell you the gross margin. They don't here. I mean, you could calculate it for yourself. I actually think they should because it could be an interesting way to evaluate the company. But we've got sales and marketing, technology and development, and then we've got general administrative. We actually see that these costs, look at this, sales and marketing actually went down. So I actually like this. To me, this is showing me, and I think this is maybe what sophisticated investors are taking a look at. Okay, sales are up. Unfortunately, for the high margin business, they are down, but they kept all their expenses in line. Okay, and so yes, sales went up quite a bit. And our loss from operations, where we're taking this much minus this much minus this much. So we lost $62 million in the quarter. And then that compares almost identically to the previous period. Again, the reason why, look, we lost revenues are up 28%. They went from 600 to 768, but we lost the same amount of money, particularly because the vast majority of these gains are, again, in this low margin business. That is why when you read these press releases, it's awesome, it's great, but jump into the numbers and really dissect this, and then you can really start figuring things out. Now, from 19 to 20 for 6 months, we went from $125 million loss all the way up to 207. But again, this is a company with a pristine balance sheet. This home business, if they can keep, I don't know, like tripled over 6 months, basically. If they can keep that growth, which I can imagine they might be able to, especially if the market turns a little bit, if they're willing to step in there and play in that kind of market, this home buying line of business could continue. I don't think it's ever going to be high margin at all because it's more, I would guess it's more of a wholesale relationship that they're developing there, but it's a very interesting line of business. Now, let's jump over to the stock chart. This stock has been on an absolute monster run. As we can see here, it's been on a defined uptrend. Now it's gapped up. Kind of reminds me of Square. I did a video on that. It reminds me a little bit of Apple, had a big gap up. Reminds me of Amazon maybe a little bit too. It's been in a defined uptrend. It has tested that uptrend and just keeps going. And now, boom, we surged up. Now, this stock got all the way up to 85, and you see some sellers stepped in and we came back. I think personally, if you want to come back in here and buy shares of Zillow, I would continue to wait to see if you can have either a pullback, maybe have a pullback back to 75, maybe the top of this candle, 73, at least a little bit of a retrace back to this trend line, or at the very least, watch this stock flatten out. Because if you go look at like Tesla's stock chart did this exact same thing, was on a big choo-choo train, gapped up, but now Tesla is trading sideways. So I'd very much, I'm not saying that's like a perfect entry point, but I do not like to buy these stocks when it's like, you know, a gap up one candle type of situation. Wait till we get a little bit of price consolidation before. This is me speaking just out of my own opinion here. I'd wait for this stock to either consolidate or pull back a little bit before I jumped in there and buy. But what I love about what Zillow is doing is they are vertically integrating. So they started with this IMT business. They started just listing homes basically off the MLS, and then they got realtors to advertise, lenders to advertise. Now they're flipping homes. Now they're doing mortgages. I just think this is awesome. I think the buying and selling of homes too is more of an in-person thing. There's all this virgin snow that they can ski down in terms of turning it into an online thing where you sell your home by clicking some buttons. You buy a home by clicking some buttons. I think this company is probably at the forefront of that, and it's very much a green field or a virgin snow type of business. So if you believe in that story, I think Zillow is well positioned. Obviously, there's others in the space here as well. There's other competitors that'll likely come on board, but Zillow's in a fairly good space, and I love how they vertically integrated. They started with one product, and they're bolting on these other revenue lines. I think that's absolutely phenomenal. So I would actually see this stock not necessarily continue from these highs even higher. I see this stock consolidating a little bit, bouncing around. If you're bullish this stock, I don't blame you. I think things are looking pretty darn good to me. What I would pay attention to is the real estate market is likely headed for some kind of downturn, at least in certain markets, maybe not across the board, but most people are predicting a downturn, including the banks, including Case-Shiller, lots of places, including Zillow's own website. If you go and look at the data, they're actually predicting in most markets that prices will retract. And so it'll be interesting to see how Zillow can capitalize on it. It could be in a down market, they capitalize even more. I don't know. I'm not 100% expert on how they're going to be able to handle that, but I can imagine that they will probably benefit in a down market or an up market. So I really like what Zillow's doing. The train has left the station. The stock has totally run away from you a little bit. If you're trying to get in here, I would wait for some kind of pullback, some kind of retracement. I think at least to the $73 level. More ideally, I think if you could get it closer to $68, $69 would be an interesting spot as well. So there's Zillow for you. Hopefully you guys enjoy these videos. Hit that subscribe button if you haven't already. Super helps the channel. And maybe that like button as well. We'll be back again with more videos soon. Good luck with your investments.